Hey, what's up, everyone? This is the Trade Doc with the Trade Setup, and today I'm going to teach you how to spot a fake out. I'm going to use a recent example from February 10th, 2022, which was last Thursday on Bank of America. And hopefully, you can take my breakdown here and apply it to your trading moving forward to avoid fake outs because as traders, we hate fake outs, right? They're our worst enemy, our worst nightmare, whatever you want to call it. And the more diligent we can be about fake outs, uh, the less we'll lose. And the lower our um, loss percentages will be, right? So we'll lose less and hopefully have smaller losses. That's what I was trying to say in a simple way. So let's get started. Basically, let's start from the beginning. Okay, so here's Thursday on ES and NQ, and right before open, we moved up into a supply zone and then sold off within 30 minutes, and then bounced. Yes, and then bounced back up to that supply zone and then sold off once again. And we'll get back to this here. It's very important for later. But this day was kind of hard to trade. It was volatile within a range. I didn't catch any of that. It just didn't work out. But as the market was moving back up from this bounce, uh, financials were stronger than big tech. So financials were the strongest sector, and that's why I was looking at Bank of America. So let's look at Bank of America leading up to Thursday. Months before, it was ranging. It kind of just slewed down and then ranged again. But then you see this hammer candle, this bullish candle, and you see this nice move, and then you start to see way more volatility and volume come in. And then we made a new high in Bank of America at 50. Obviously, not exactly 50, but I put 50 because it's a really good even number, right? It's a whole number, it's an even number, basically a whole number, and 50, psychological number. Anyway, so it sells off, it consolidates, sells off, and then it picks up again around that 42, 43, and makes a huge, huge green hammer candle, and then just moves itself back up really nicely to 50 again. So let's get into what we saw leading up to this trade. Oops, I actually want that on. I'm trying to add view up. Yes, there we go. Okay, so on Tuesday, you can see that it opened, it rushed into 50 and then sold off, right? So another retest. Well, the first retest in a while. But in those 2 days leading up to Thursday, after this touch here, we had this consolidation, right? Between 49 and 50. So this $1 range pretty much. And then on Thursday, let's go to 1 minute because we're scalping and we want to see some detail here. And then on Thursday, pre-market before the open, we had a retest again of 50. So this is my alert. This is, hey, buyers are pushing up to 50. There's some interest here. Okay, so we sold off, and there's nothing to do here for me. But then at open, you can now let's compare again. So let's compare ES moving down and then back up. Okay, number one. Sorry, I got a little. I got some allergies. Excuse that. Anyway, while ES was moving down, financials were strong, and Bank of America was pushing up to its all-time high again. So this is a divergence. Okay, a positive divergence on one stock against the rest of the market. It touched at 50 and then immediately sold off. We did not get in here. That would have been very premature as it was only the 4th minute into the market. But then it hung around here, okay? And then it tested again. So this is showing us that buyers are really interested in this $50, right? They're trying to find price acceptance above 50, okay? And then it sold off again. Now we didn't enter here because there's no confirmation once again. This is basically already a fake out. This is market makers faking out the most baby traders, right? And then the fake out that happened to us is going to be mid-season to more experienced traders. But let's talk about why I entered. So after this fake out here, it comes back down to VWAP and then just hangs around here right above, right below 50. So obviously it's going to do one of three things at this very critical place around 50. It's going to continue to sell off, which it didn't. It's going to continue to chop, which it did, or it's going to push right back up and fly away. So as it continued to chop, it tested VWAP and then made this, like, on this shorter time frame, a higher high, okay? And then it fell back a little and volume really died off, as you can see down here. It died off, but it held above VWAP. So it's one of two things. It's holding above VWAP and it's holding right under our breakout zone. And then as you can see right there, it's also forming a cup and handle. You see here, it's also forming a cup and handle on ES, okay? So this was our entry here. It's a moderate trade. It's an average trade. Why? Because we're front running the breakout. Now, as you get more screen time, as you figure out your style, and are able to take in different strategies and different methods and place them together to form your thesis on trades, you'll know whether to front run a breakout or not. Okay? I can't tell you exactly how to front run a breakout, but it comes with experience. Maybe I can try to break it down in a later video. But two things you should know. If you front run a breakout, there's less probability that the trade is going to work out in your favor, right? Because there's no confirmation. It could just sell off. However, your risk to reward is much, much smaller, because if you put your stop tick down here, you're only losing maybe 2 to 4% on that, right? Whereas if you got in up here and now your risk to reward, maybe it's down here, you have to really hold this trade much longer just to get a RR of 1. But here, now your RR is, 1 to 4, 1 to 5 already. If you get the breakout, you have to take into account volatility and all that. So back to this trade, we got in around here. We were barely in the red for any time. And then, what happened on the tape? This is important because we're going to come back to the tape to, and I'm going to explain how the tape helped me observe this fake out. So when we got in here, right as it was hanging out around here, and I do apologize, there's no live recording here. This is my first time doing this breakdown in a YouTube video, so I'm going to try to live record videos, trades in the futures, because I know that in-depth detail, seeing it live, can really help out people a lot. So let's just use our imagination for now. I'll try to explain it best I can. Basically, we're sitting around here, and then I see 15,000 shares on level 2 on the sell side at $50. Okay, so here's the level 2 sell side at the ask, and then at the bid on the left. So on the right, I see $50. It's coming out. It's hanging around here, and there's 15,000. And then right around here, within these 1 to 3 minutes, I see all of them get filled. Okay, so it wasn't a spoof order. It was a real seller sitting at $50, and the tape came in like bam, with speed and volume, and all 15,000 of those were eaten up by buyers, and they were eaten up aggressively. My time in sales lit up, and it showed me on Dash Trader. You can see if it's above the ask or at the ask, below the bid or at the bid, and they were all above the ask, meaning that buyers were present and they were very aggressive. And that's why I use Dash Trader, because you can't see that delineation on TOS, Thinkorswim. On Thinkorswim, you can basically see the transaction. That's all. And the red and green on TOS just shows you whether it was an uptick or downtick relative to the last sale. Okay. So anyway, what do we know about candlesticks? They're basically painting a picture of time and sales. Okay, it's the same thing. They're live indicators. They're not lagging. So this is what I'm explaining here. I'm explaining the price moving up with aggression and with volume. As you can see, the volume increased. If we change the 5 minute, maybe you can see it better. Yeah, you see that? So right here in this 5 minute window, the volume was almost triple of the average of all these last 20 minutes here. And that's what I was seeing on the tape. So right there, we had entered at 30 cents per contract on the 50 calls. And then right when that happened, we trimmed out at 35. And that was about 17 to 18%. And I took it quick because I saw a few things, okay? So I saw a few things. So this pullback is fine. Usually this is a healthy pullback. But once we got around here, the tape was looking was grim to the buy side. Okay, there were no buyers flipping to 50 to hold that 50 level up, and that's an alert to me that although it broke out, for me I need to see buyers continue to hold it up. Okay, especially on a pullback back to what was previously previously resistance. Now I need to see it used as support. Number one. And then number two, remember I said we're gonna go back to ES and we're gonna go back to that. We're gonna go back to that rejection of supply. So right at open, we fell, and in the first retest of Hive Day, we got rejections here. Okay, and yeah, you might say, okay, it's kind of basing out right below there, but then volume started to really come in, and that was the second indicator, and that's why I said, see, supply is being met with a pullback on SPX. You see that? So this is considered a fake out to me. We had one here which was very clearly a hard fake out, and then here again harder to spot. But we got out at 35 cents, and then our runners we even got out at 33 cents. So they were all in profit, even the stop loss on the runners. So to recap, why did spotting that fake out? How did spotting that fake out help us? Okay, we'll go over two scenarios, and that'll be the end of the video. First scenario is what we actually did. We front ran this breakout, and we got out for profit. It wasn't great profit, and I'm not here to brag about getting profit of 16 to 17%. I'm here to brag about protecting that 16 to 17%, right? Because this thing really didn't move anywhere. The profit really just came from this small move and the volatility increasing on the premiums. We're supposed to see this move up and hold it, maybe 30 cents on a $50 stock. But we didn't, and we protected that profit because we protected the fake out. So for this trade, we protected our green from going into red. Now, what if you had, the second scenario is, what if you had waited for confirmation, which there's nothing wrong with that. Like I said, as you get more screen time, you're going to figure out what to front run and what not to front run, when to enter, when not to enter, when to take a trade or not take a trade. So let's say you took this trade here. You probably got filled at 35, 36, 37 cents. And if your stop loss was down here, let's talk about this realistically. It broke back below 50 and you're like, oh, well, look at the VWAP and look at how many times it got held up here, right? But this down here is a 30 to 40% loss, okay? This goes from like 37 cents down to 25 cents. That's a big loss, okay? Whereas if you spotted a fake out and you got out when we got out, which is right here, now your loss is very, very low, okay? Maybe 10%. So it's quite the substantial difference if you're able to spot this fake out. So that is my thought process on how a breakout to a fake out goes. And I think we don't talk about it enough and break it down enough, because we always talk about when to enter, but we don't talk about when to exit, whether that be in profit or in red. So I hope this helps you moving forward in your trades, again, to protect your profits, take smaller losses, and take losses less often, because that's one way that we can help ourselves to become consistently profitable traders. Okay, so this is my first time making one of these kinds of videos, but please like and subscribe if you want to see more. We are going to do a lot more. Please leave in the comments what you think about the video. I might have been all over the place, maybe not. Or you can comment what you would like to see. If you want to join our community with exclusive education, with real life callouts, with our algorithm and algo trades, please go to thetradesetup.com and just sign up. There's 2-week free trial with every sign up, and it's a great community. I hope to see you guys on the channel or in the Discord. Happy trading, everyone. Thanks for watching. See you next time. Bye.